Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, January the 18th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you guys are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. Across the pond, actually in China, we got retail sales year over year came in at 9.4, expected to be 10.1, so slightly lower than expected there. Nothing else really across the pond, but here in the United States, we did get a lot of information, economic data. We got building permits, came in at 1.3 million permits pulled, expected to be 1.29 million permits pulled, so slightly better than expected. One thing with the building permits, it is a forward-looking metric, but at the end of the day, they can pull as many permits as they want. They don't have to start building, and we see that showing up kind of in the building starts, or housing starts, I should say, came in at 1.19 million units started, expected to be 1.28 million units started. So that's the real number, to be quite honest, even though it's not as widely looked at as building permits. Like I said, you can pull as many permits, but there we show, 100,000 units less than expected on the housing starts. Then on to Philly Fed manufacturing, came in at 22.2, expected to be 24.9, slightly lower than expected there. Unemployment claims came in at 220,000, expected to be 250,000, so lower than expected there is good. And then we got natural gas storages, a drawdown of 183 billion cubic feet, expected to be 201 billion cubic feet. And then on to crude oil inventories, we got a drawdown of 6.9 million barrels, expected to be a drawdown of 1.4 million barrels. Now, we really have to dig into that number to really see what's going on. We've been talking about this lately, that we're starting to really see the production or the distilling of this crude oil into its finer parts, such as crude oil, gasoline and distillates. So what we've been seeing is a big drawdown in crude oil inventories, but then we're seeing a big build in gasoline and distillates. Well, one of the things that we did see here is another build in gasoline, the 10th straight week of builds in gasoline. But distillates, we did see a big drawdown, and the biggest drawdown since October 20th of 2017. So we saw a drawdown of 3.88 million barrels. That being said, those distillates is going to be going into home oil, so home heating oil. That being said, that has to do with a lot of the colder than normal temperatures that we saw. So I think that's where we're seeing that big draw. I don't think we're seeing the distillates going into the manufacturing as much as we are seeing that going into the heating of homes, which isn't necessarily an economic driver. We'd like to see those distillates being used in the manufacturing aspect, and we're really not seeing that. A couple other things. We saw a big drawdown in Cushing, 4.18 million barrels. Could be the largest on record. It was a huge draw on the Cushing side. Cushing being crude oil from the Cushing side. Also, what was the other thing I wanted to talk about here was that we are seeing the fracking operations really start to ramp up. As a matter of fact, fracking, well, we talked about this, they're going to start ramping up that production outside or above $50 a barrel. That's where it starts becoming more profitable. They will run those processes, the fracking operations, when oil is below $50 a barrel, but they're losing money on that. And the reason why they're losing money on it is because it costs too much to start those operations back up. If they shut them down, they're just kind of waiting. They're just, bare minimum just to keep those operations going. But now that we're above $50 a barrel, they start cranking that up. And as a matter of fact, we are seeing record amounts of oil come out of shale oil. Basically, it's a surge of 10 million barrels a day which is toppling the record set in 1970. So that is a huge number, and that's not likely to last because they are expecting to ramp that up to be about 11 million barrels a day by 2019. That obviously is if oil prices continue to move higher. That fracking operation is profitable. They will start really cranking it out. So a couple of big economic data points just in crude alone. And as you can see, crude oil kind of trying to digest this stuff, on that's the DOE number on the API, which is the one that is not really required by government. That number kind of threw a lot of people off because it showed gasoline and distillates rise. So with that drawdown in distillates, that was a bit of a surprise for everybody when we saw it on the DOE. All right, on to the overall markets. Like I said, crude oil unchanged, but bouncing along that trend line that I've talked so much about. I don't know if we're really going to see any kind of pullback, despite the fact that we're seeing builds other places when the refiners get a hold of this product. The refiners taking the crude oil and converting it to distillates and gasoline, even though we're seeing a build in gasoline there. All right, on to gold futures. Gold futures off a little bit today, but staying above that 78 fib level. It came down to test it, actually even tested the 9-day moving average, now lining up with that. That's going to act as a pretty big support level. I was expecting gold to start kind of falling over. I think that gold is holding its weight right now because people are starting to get a little nervous at these highs of the equities. I don't see any downturn imminent in the equities. Decent economic data. As a matter of fact, the Fed even released today, somebody, I can't remember who it was, one of the Fed governors, said that we could, under Powell, see surprise interest rate increases, which we haven't seen for quite some time. As a matter of fact, Greenspan used to go at all kinds of times during the day, just off meeting. And we had a talk with him. As a matter of fact, he came down to the Board of Trade and had a talk with a lot of the traders down there. And we talked about how much money is being hedged on a daily basis. And if they get in there and they raise interest rates or lower interest rates off meeting when nobody's prepared, people haven't gotten their hedges in place and they are naked. That can be disastrous for a lot of these banks and other people that are trading on these interest rates. So, I would hope that we don't necessarily see that because it can do a lot of damage to people while trading during that just an off meeting move when nobody's ready for it. That can really hurt. But it will give us volatility, which is what we're looking for, right? We all want to sell some premium. So that is a good thing. Anyway, just a side note, something I thought about or read about earlier today. Anyway, Bitcoin now back above that 10,000 mark. We came down and tested it. I expected us to go down and test it. I thought we would see a little bit more support there and or resistance trying to get back through it, but it cut through it like butter both ways for the most part. But now that we're back above that 10,000 mark, right at the point of control for the volume, this is where the most volume has exchanged, which adds validity to the value at 11,600. So that is the marker. Actually, it's probably 11,800, right? 11,800, 11,900, we could call it, where the most volume has changed hands. So that acted as support. I talked about it. It needed to be tested. It was tested, and now the bulls are coming out and supporting that market there. Bonds off almost a full point. They were down a full point earlier today, or at least very well close to being tested on that full point. We are a little overextended to the downside, but I think that these surprise rates are kind of getting the bond market a little jiggy. As an off-meeting raise, they've got to be ready for it. You can't be rallying when they're starting to raise rates. That just doesn't work. So I think that we're going to continue to see a bearish move in bonds, despite the fact that the economic data is a little bit lackluster. It's kind of like humdum anymore. We were starting to see some real good robustness, but I mean, valuations are just getting crazy. Boeing's got better valuations than Amazon and Apple, I think, even Facebook. So Boeing blasting off, as we've seen that whole market, just a lot of markets actually just taking off to the upside and really destroying normal valuations that they've known. VIX in the 12 handle. Bonds up. We've got a real mixed bag in the equities. Bonds are up, NASDAQ is up. Bonds are down, as you can see. Hello, Eric. NASDAQ is was up anyway. This is the Dow Jones Industrial Average. It is down by almost 100 points right now. It's pretty much been a downward spiral from the start. This is the NASDAQ up about 3 points, as you can see here, not creating a new all-time high as we saw in the Dow Jones. That was on the open for the most part. And we've got the E-mini S&Ps slightly off on the day. You know, with the Dow and the being down, the NASDAQ being up, and the equities being down, you know, that's what I was talking about with a real mixed bag. But for the most part, NASDAQ and E-mini S&Ps are unchanged, only down, you know, a couple of points for the most part. And this is the daily chart of the E-mini S&Ps. As you can see, we got that high yesterday during the day session, overnight session. Pretty quiet for the most part. We did have seen the same thing as I talked about with the Dow Jones market coming off right after the open. It just really hasn't been able to hold its own legs. A couple of bounces, but you know, it's been a steady march to the downside. All right, on to a few things that I'm looking at with IBM. I talked about this. I've traded IBM several times in the past on their earnings and gotten beat up to the downside because they're beating on earnings, but they're one of the major components of their business is the service side of it. And they've been trying to roll this over more into cloud-based, which I think is the history of IBM for the most part, because the reason why is it is a very low maintenance type of their business, whereas the service side is, you know, labor intensive. So they have to have a lot of people in there. The margins aren't as good there as it is on the cloud side. So I think that people are going to start getting used to IBM going more away from the service aspect and into the cloud services. And I think that IBM, I'm going to be playing it to the upside. I can get well outside the market maker move, which is right around $7. I think I can sell the 160 puts for about 70 cents or something like that. So that's probably what I'm going to be looking at for IBM. So stay tuned on Twitter to see what I end up doing on IBM for that matter. And then with the UPS trade, still in it. I was ready to pull that ripcord this morning. We blasted above this high there, and then the market, I looked at it on the 15-minute chart, started looking a little bearish. So I'm going to hold off on this one more day. It's coming back. It's actually a slight, you know, I'm making back some of my money, believe it or not, with this one. It's still a loser, don't get me wrong, but a little down correction tomorrow will help out quite a lot. As a matter of fact, I'm short the 132 calls right now. So we're a little away from that by about $2, but we've seen those type of moves happen in a day. So hopefully I can get that to happen tomorrow on the last day. Down to 132 would be beautiful. As a matter of fact, I would really celebrate that for sure. And that's about it. That's what I'm looking at so far, saving my margin for the IBM trade. So I'm not going to put anything on today. May put something on if I take off this UPS trade, but I think I'm going to hold off on that one and hold on to that for a little while. At least until tomorrow, and see how that goes. I'm not going to probably let it go into expiration. I'm probably not going to roll that out in time, although I am pretty tempted. All right, that's about it. That's all I got for you guys. Friday's webinar is going to be on the short put spread. So if you're getting into options or you have traded options with not much success, I'm going to show you how to increase your probabilities of success with the short put spread. I'm going to show you how to be mechanical with that, how to stay alive in it, the right strike locations. That is imperative to being successful with this strategy as well. All right, so go to ProTraderStrategies.com and sign up for that. If you can't take that, take it easy.